G'day everyone, it's Chris Carlin here, masteryourmoneynow.com.au, helping you take control of your finances from the comfort of your own home. And in this week's Whiteboard Wednesday, I want to talk to you about diversification. Now, what is diversification? Sounds like one of those big fancy finance terms that only the financial planners like us use, and ultimately it is. But this theory really will help you to understand your finances and how we use that to increase your returns and decrease your risk, okay? So diversification is talking about spreading your investments or your income across multiple different sources or asset classes, okay? So think of it like a table. If your table only got one leg and that leg falls over for whatever reason, all of a sudden, you don't have a leg. You've got a surfboard, and that's not going to be much use for you in your kitchen or living room. Okay. Whereas if you've got a table which has got four legs, and one of those legs falls over, your table's definitely going to wobble, but it's still going to stand, and that's really important from a financial perspective. Here's the thing, I see people all the time, they focus their retirement or their income on one source of income, one strategy of growing their wealth. If that goes well, yeah, great, the risk is paid off. But ultimately, what I generally find is sometimes a lot of times that falls over. It doesn't work. The economy changes, their job changes, whatever that might be. Therefore, once that falls over, their whole financial plan, their whole financial situation falls apart. Whereas if you've got multiple sources of income or multiple sources of assets, then if one of those does fall over, if there's a global financial crisis or a property prices fall, whatever that might be, then yes, it's going to impact some negative returns, but you've still got these other sources of investments or incomes in order to keep your financial situation going, okay? So what does that mean from a practical perspective? Like I said, the first one is income. What I see with a lot of people is they're solely reliant on their salary. They've only got one source of income coming into their financial situation, coming into their finances. But if they get made redundant or get fired or unable to work due to injury or illness, whatever that might be, then if they lose their income, all of a sudden they're in a really bad financial situation. And they've got all these expenses, they've got to pay the mortgage, the school fees, the food on the table, and they've got no source of income in order to fund that. What we do from an income perspective is look at building multiple streams of income. That might be from investments, that might be from superannuation, that might be definitely from salary as well, it might be a business, it might even be Centrelink, whatever that might be. We're looking to build multiple sources of income. So if, for example, you did get made redundant, you've still got some sort of income coming in from your other investments, okay? And the second way that we use diversification when it comes to investing, especially in big lump sums. Let's say you received an inheritance or got a one Tats Lotto and won $100,000, for example. No financial planner should ever put all that money into one asset and one asset class. If they put all those shares in, or all that money into, say, Australian shares, for example, I would say that you've received some very bad advice. Because if the Australian share market falls over, then all of a sudden those funds can drop quite substantially. During the global financial crisis, Australian shares dropped by up to 40%. So that 100 grand could potentially become 60 grand in a short period of time. If you've got received that advice, you've got a license to sue there. But if you spread that across multiple different asset classes, you put some in Australian shares, you put some in international shares, you put some in the property market, you put some in cash, put some in term deposit, put some in bonds, into growth investments, defensive investments, something I discussed in another Whiteboard Wednesday. If you spread those sort of investments, you're going to get better long-term returns because it's based across a broad range of investments, and also the downside risk. If one of those asset classes goes wrong, the other asset classes are there to help prop your returns up, okay? So when it comes to diversification, it's a really crucial concept when it comes to building your wealth. You cannot rely on only one source of income or one source of building your wealth. Ultimately, you want a broad range of income streams, a broad range of investments, which is something that you can work with your financial planner. If you want to discuss this in a bit more detail with your situation, go to masteryourmoneynow.com.au/get started and book in your free 30-minute consultation with me or one of our other financial planners in order to start building multiple sources of income and investments. If you like this video, make sure you share it with your friends, family, and work colleagues. And I'm looking forward to seeing you in next week's Whiteboard Wednesday.